Hi everyone. Uh, I ran the simulation this morning and I'm going to review the results and try to provide some helpful hints of how to perform better in the next round. I am playing along with the students in my own team called Professor Nugent's Auto. And here is my overview page, and you can see that I only earned 100 points, which is actually pretty poor. Uh, our revenues went up. Revenues per share went from $12 to $14, which is a 21% year over year change, so I earned 21 points. However, my quick ratio and debt ratios, I lost points because my quick ratio declined. We want the quick ratio to be higher. That would show that I have more current assets than current liabilities, and here it's lower, so I lost points for that. It's 50% lower. My debt ratio is higher, and we want a lower debt ratio. Debt ratio would be showing your debt compared to your assets. So here my debt ratio increased, so I lost some points, and that which mean I borrowed money, which I did. Now my gross profit margin, I started out in year 0 at 40%. And I wound up lowering my profit margins to 37% in year one. So I lost 7% of that. To make matters worse, my operational dropped from 23 to 16%. I lost another 30 points. It's a 31% decrease. The reason this dropped was that I spent a lot of money on marketing and some money on investing in the company. My net profit dropped from 16 to 10, so I lost over 100 points here, or no, more like 70 points here in my net profit area. Now, having less profits is going to translate into lower total asset turnover, equity multiplier, return to equity, earnings per share, and return assets. So I lost points in all those. Although I was able to increase the market capitalization of my company. Now remember, all these financial ratios are in the student user guide. They talk about these financial ratios, the formulas, how they're calculated. This is something that's also explained in MBA 502 Finance um, and the Financial Accounting MBA course, which I think is 504. So you should not be any strangers to financial ratios, but it's just really measuring the performance of the company. And year over year, I have not performed better. I've performed worse. So I'm losing points. I did pick up some points in my forecasting categories. So I was able to sell 100% of the cars that I had forecasted, but that could be a bad thing too. And I'll explain later how that would occur. So I did invest heavily in the company, which is a good thing. So I earned 100 points by making operational investments. But I had a deficit. I thought I had a surplus, but I wound up running a deficit, and that cost me 100 points. So let's explore a little bit more um, what happened. So I'm going to go to the charts page here, and the first chart comes up, and you can see that I did increase sales and I did increase profits. Um, However, I did that through the profit increase in total dollars is through the increase in sales. But my profit margins declined. Now, anytime a stock issues an earnings release and if sales fall, stock price usually falls. If profit margins fall, the stock price falls. Um, if both sales and profit margins are falling, the stock price is decimated. So we want to get our sales increase every round, and we want our profit margins percentages to increase every round. Um, okay, now see here that my earnings per share is has gone down, which is bad. And then if you look at my market potential versus actual sales, you see that my actual sales were 1,500 here. I could have sold 2,392. So I lost a big opportunity here. So this chart is very important. Market potential versus actual sales. The blue is my potential. The pinkish here is my actual sales. So I only built 222 cars, and I sold all my 222 cars. That's why I had 100% on my sales forecast. However, I missed the opportunity. I could have sold 500 more cars. So in each category, I under forecasted, which hindered my ability to increase my profits, expand my sales even further. So I have to pay close attention next time I forecast my products. I'm going to go based on the market potential here and not based on the my actual sales. So when if I know that economy class is going to grow at a certain percentage, let me pull up the student user guide to see what that percentage is. So here they give me a nice chart, and it says economy is to grow at 25% a year. Okay, so if this is my potential, and I feel that my cars are going to be equally competitive next round, I'm going to grow this 2,392 number 25%, not what I actually sold because I had under forecasted. So it's a key insight in how to keep your forecast on target. All right, so let's see. Let's look at the industry charts, and we'll see how everybody else did. Okay, net profits by team. We could see that um, Philip Autos had the most net profits of any team, followed by Seawolf's Auto Club, and then we have over the 50 million mark of profits. We also had Bluth's Original Frozen Banana Stand. I guess a reference to Arrested Development. I still hoping this summer to get a Netflix account and see those new episodes. Summit Auto Group, Psych, CSW, Automobiles, and Ricardo Motors. So also Henderson Auto. So all these companies did very well over. If you made over 50 million in net profits, you're doing very well. And if you made over 1,000 points, actually for the first round, if you do over 500 points, you're doing well. And we had a few teams hitting 1,000. Seawolf Club, Philip Auto, Ricardo Motors, CSW. You see how there's a pattern here? Excuse me. The pattern is if you have big profits, you're going to have big points because they kind of cascade. Those profits cascade through a lot of the financial ratio categories. So we could see that profits have done very well. Here's me, Professor Nugent Autos, in last place, and that's a good thing because I wanted to do poorly so I could use my company as an example of how to fix this and how to improve. Because I don't really like using another student's company because I don't want to really belittle or expose, one student to another to the whole class and sort of build my case based off their mistakes. So I'd rather pick on myself than anybody else. But we had a few companies here underperform a little bit, and that's okay because it's only round one. You can easily catch up. You'll see next round I'll catch up quite nicely. So we have to say that Philip Autos really stole this round. They had the highest profits, the highest points, and the highest stock price. So I guess it all kind of makes sense. So we should all focus on what did Phillips Autos do last round that was so successful. And we can see here that there's a wide range of stock prices. Most people are $16 or below, and I'm in last place at $8. So I got to improve my stock price. My shareholders are pissed. You know what I'm saying? Okay, sales. We had, let's see. The sales are actually pretty high for a lot of companies here. Although, let's see. Interesting that Phillips Autos, they're not number one in sales, which this is something that really confuses a lot of students. How could you be the number one in profits and points and not be number one in sales? Because think of it like this. This is a very important business concept to understand here. And I'm just looking at I'm last place in sales again here. Okay. Would you rather have a company that has $1 billion of sales or $200 million in sales? Of course, everyone says, oh, $1 billion in sales. But if I told you that a company with $1 billion in sales has a $200 million loss because they were selling all their products at a loss, then you would say, well, I don't want that company. But the $200 million company has a $50 million profit because they sold their products at a very profitable rate. And that's what I suspect Philip Autos has done is they maximize the efficiency of their pricing and the profits on their company. And even if they had to sell less cars because they were selling them at a higher price or had met the customer's expectations a little bit lower, they were okay to give up some sales if it meant increasing their profits. Think of a big company saying, okay, let's let's drop our low cost, low profit product and focus on more a higher end, higher profit product. So we'll sell, our sales volume will be overall less, but our total profits will be more. And when it comes to um, corporate strategy of a company, their goal is to maximize shareholders' wealth. Their corporate strategies should be short term and long term, with a focus on long term, to maximize shareholders' wealth and build a stronger company. Okay. And you can see here again earnings per share. Philips Autos had the highest earnings per share, and poor Professor Nugent had the lowest earnings per share. What a loser he is. But don't worry, I feel like a comeback is going to happen in the next round. Um, you could also look at the sales and advertising charts for graphically trying to see, who spent the most in advertising and who spent the least. So it's just our actual sales per item and then the advertising. We can see here that interestingly enough, Phil's Autos did advertise heavily. So they may have used advertising to compensate for a car that wasn't as attractive. And companies do this all the time. They have products that really aren't healthy for us, or aren't, the best product on the market. But the pure fact that they advertise so well generates a huge amount of sales and profits. So you can make sort of underrated product that's not the best in the market, but since your advertising is so effective, you wind up selling a lot of your product and making a lot of profit. So that's clearly a strategy that worked for Philips Auto. We can see our percentile ranks. And in our percentile ranks, we get a percentile for the company. I guess this is in score from top position to last place, which is me. And then the percentile rank. The percentile rank is how many people you've beat. And I've beat, and this is let's see here. Percentile rank compares your performance against all other teams worldwide. If your percentile rank is 65%, then your team performed better than 65% of all the teams for that round. Okay, so and the last time I checked, there's over 5,000 teams that run round one, and I only beat 10% of them. Where Philips Auto and Ricardo Motors have beat about 95% of all other teams in the world. So that's a huge performance. This class overall, almost half this class beat 75% of everybody who's run or played the simulation before. Now, I could attribute some of this success to some of the students have run this simulation before in another course, which is good. But I do feel that running the simulation again, especially the way I describe it and talk about it in my lectures and in my class, is very good for a strategic capstone, because it gives you some sort of experience applying some of the strategic concepts we're learning in the Kellogg's on Strategy book, especially into the simulation, as far as competing with advertising, competing on product design, different strategies that you could use, low cost provider, things like that. We can all sort of test out in the simulation environment and sort of use the simulation in a different light than you might have used it in another course. If this simulation is new to you for the first time, you may want to run a few sets of practice rounds to catch up to some of the students who have been using it previously. And we took the gross. Now, astonishingly, Philips Autos had a 99%, and Seawolf Club, Bluth's Frozen, Original Banana Stand. I have to laugh every time I say that. Ricardo Motors beat 95%, 99% of the top two of all of the teams that played this game. So I'm really curious as how they did that. I mean, it's phenomenal. It really shows that our MBA students at Stony Brook, can compete with some of the best universities around, which is I'm very happy about that. And the same thing with stock price, and this list kind of goes on and on, and pretty much for most categories I place last. So, but I'm gonna form a comeback, and you're gonna see how I'm gonna do that in a minute. All right. So let's go to, actually there's something here called assessing learning goals, and this is, so for me, I scored a 1 star, 2 stars, or 1 star in most categories, and I guess they have a hint how to here's actually a hint. Read the forecast section of the student user guide. Look for your market versus actual. That's the chart I was telling you before with the blue and the pink. Increase your marketing spending. Increase your vehicle characteristics to better meet expectations. So there's ideas of how to improve my revenue, and my performance is poor. So I'm hoping to improve my performance by the end of the round. I'm sure some students in their learning assessments have scored much higher than me, but I'm going to make a comeback next round. You'll see. Now here's the industry page. In the industry page, Let's find some companies that did very well, such as this company made 860 points, and I could see what their market potential was, what prices they sold their vehicles at, their gross profit percentages, um, and their earnings per share, the total points. So here you can get a good look at all the companies who how they performed. You may want to look at, what did the, some of the higher performing companies, how did they perform? How did they actually make their cars? So this will show you, and this is true in the auto industry. These are last year's statistics. If I wanted to go and see how Honda, Toyota, GM built their cars, I just have to go to a dealership and they'll list all of their fuel economy, engine power. It's all on the stick, the car sticker, also online. And these companies are public. They'll publish their financial ratios and their key financial highlights. So this is nothing that you're nothing that's not true the real world as well. All right, so I have my financials backed up for year 1 and 0 in case I want to utilize them or analyze them a little bit more closely. And then the simulation starts all over again in round 2. So in round 2, I invested in a number of operational cost reductions from the production page. So from the production page, I invested in 5 levels of each for each vehicle class in new technologies. For every level of new technologies, I get $300 cost reduction. So it takes a year to occur. So I got this for the first time this year, even though I invested last year. So it takes a year to implement and start seeing the benefits. So this is going to help me increase my profit margins. So I'm going to more strategically develop my car here. Oop, get these warnings because sometimes I can't go too low. Okay, so I'm going to make a car that's a little bit more profitable, and let's see where I get with that. Okay. Okay, so I was able to increase my profit margin by a good deal here from the previous round, where I was averaging about 37%. Now my sales forecast. Now, like I said, I'm going to go off of the market versus potential chart. So if I go back to charts, you see my personal charts here. And these numbers here, I'm going to go with these blue numbers for my forecast. So here I have 2392. I have 2729. And this is what I could have sold if I built enough cars. So 1698. All right, so I'm going to escalate these by these percentages: 25, 20, 30, and 35% for each of the classes. And you can see that my actual performance was higher than the guideline for year 1. So I must have built cars that were more attractive than the average competitor. So I built good cars. I just didn't make enough of them. So my forecasting was weak, and that was a fail on my part. Okay, so I'm going to make those calculations, and I find that, let me get back to my sales page. So I'm going to enter here 2990. That's an increase. And let's do the sedan class. And remember, I'm just going to put my forecast in first, which I already calculated. Now, the importance factor is important. So if something is important to the customer, it's important to me. If something is less important to the customer, I'm going to go a little bit under customer expectations to increase my profit margins. I mean, if they really don't care so much about it, maybe it's not going to affect my sales as much. And that's the way it works. So I'm going to make sure that I get higher on my safety features. I'm going to put a slightly higher price. Okay, so I have a nice profit margin here. Let me try to get the top end of, I'm actually going to exceed my safety features. They're really making my car that they're going to love. And I'm above my last round's profit percentage, so that's good. Now I'm going to move on to truck and put my new forecast in. So let's see here. Now truck is a harder one because this engine power is really kind of expensive. So price, I'm going to actually, you know what I'm going to do? I'm going to actually make a lower. I'm going to try a different strategy. What if I make a lower engine power to save money, but then I'm going to lower my forecast because I don't think my car will be as marketable. But taking a cue from another player, I think that having a higher profit margin and lower sales will be better for my company than having a lower profit margin. So I'm going to try that with the truck. Now I'm going to put in my estimate, which is my potential from last round times the increase in the market. Because I feel I'm going to make cars that are just as good as last round. And now, since I don't care much about the price, I'm going to make the highest price possible. And I think with luxury cars, you would agree, who wants to drive around in a luxury car that costs 20 grand? It's not the purpose of a luxury car. The purpose of a luxury car, of course, is to get a good car with all the luxury features and high quality, but to show people that, hey, listen, I'm making good money. I could afford this car. So I think a luxury, part of an expectation of a luxury vehicle is that it has a high price. All right, so here I filled in my sales department. I'm not going to do my reflective observations, which is only optional for this game. Okay, so for the advertising and marketing, again, I'm going to go to defer to the student user guide, and I'm going to see here that here are the percentages of effectiveness for each of those advertising media categories. And so I see the television is very effective, and I see that direct mail is effective for luxury, and newspapers are effective for economy class. So I'm getting an idea of where to spend my money based on the effectiveness. Now, keep in mind that on the sales page, and a student pointed this out to me the other day, if you add up these importance factors for, say, the economy class, they don't reach 100%. So when a student emailed me about this, it was a really great point. So I kind of looked around, and then I figured out if you add the marketing importance factor to the sales importance factors, that's how you get to 100%. Now, the demographic targets are important if you're filling out the reflective observations, because if you're going to have an advertising slogan or our demographic advertising strategy, which is or what strategies did I employ while allocating my advertising investment dollars, that's all part of the role play of the simulation and would tie into, I guess, nicely to some of the competition chapters in Kellogg's. So if I'm going to say, pick a young age for my economy class vehicle, maybe my advertising strategies will be advertising to recently graduated college seniors to buy the car. So but these demographic targets, I suspect they're just part of the reflective observations, so they sort of tie up together. It's really this advertising investment area that's going to impact how many cars I sell. And I've actually tested this where I didn't advertise and I had a very low market demand, and then I advertised excessively, doing a little gaming of the system in the practice rounds, and I found that advertising is really important to getting your sales out there. So I'm going to, I guess, just fill in a couple categories here. I don't really have the time to scrutinize everything as I should, but for the sake of not boring you to tears on this video, I'm going to just enter in some money here. All right, so I'm going to leave it like that. And I'm going to put $1 in all my undone categories, because if I'm the only one that invests in this category, because it might be a low performing category, I'll get all the sales in that category. All right, so I did my advertising. I'm going to go over to my production page. Now, in the production page, if you have inventory here, that means that you over forecasted. You built too many cars and you didn't sell enough. And that excess inventory you have here may have led to a unexpected deficit. So on the finance page, you may have saw a surplus. You look at the results for round one, and now you see a deficit. How did that happen? Number one reason, you had excess inventory you didn't sell. You didn't sell them. You didn't get the sales for them. You didn't get the profits for them. You wound up having an unexpected deficit. Okay, so another important thing is don't buy more plants than you don't need. Don't go here and buy 6 plants. That's ridiculous. I only need 3 plants in total to meet my sales forecast. Why would I have 3 extra plants sitting idle with all these employees and all these automotive parts that are not needed and aren't going to be used to build any cars? And that's part of why they ask you to calculate this capacity utilization to make sure that you're operating efficiently. So here, I'm going to bring this back to let me bring this back to 0. Here I already have 2 plants. I only need to buy 1, and I'm always going to try to make my excess or shortage 0, because if there's no need to pad your production. If your forecast is this much and that's what you think you're going to sell, uh, in addition to your inventory and your production, your excess shortage should always be 0. If it's not 0, then your pro forma financial statements will be wrong. So you have to be, you want to be accurate with your forecast and keep your forecast accurate to your production, so your pro forma financial statements will be correct. If you think you can sell more cars, then put it in your forecast. Don't just build more in production. And I've seen some students doing that. That doesn't make any sense to me. So here, I need to buy another plant to meet my goals here. Now, here's an interesting dilemma. The sales forecast is 2,100, so I'm going to have to buy a whole plant just to make 100 cars for the year. And I don't think that's worth that. So what I'm going to do is let me put 2,100 here for right now. Although I think I will do it for the, let me just submit this. I'm going to actually go back to the sales page, and I'm going to lower my truck sales to 2,000. Maybe I'll even lower I'll make them just a little bit more profitable too. So since there's less demand, I'm going to generate less demand here. But the reason I'm lowering those, I'm just going to reissue it. The reason I'm lowering those is so I can actually not have to buy a new plant and spend $10 million. Because it doesn't make sense for me to spend $10 million, build a whole new plant just to make 100 cars. So I'm going to, because my utilization of a plant would be only 10%, I'm not going to waste the money. And I'm going to go in and actually buy 5 levels of production robotics. And I'm going to spend I'd rather spend some of that 10 million in my operational investment so I can maintain a strong profit margins next round. If you don't make operational investments, you will not have a company that's efficient or effective moving forward. The reason auto companies have been able to make, if you look at a Honda Accord today, which I recently just leased one, they have a rear view camera standard. They have so many additional safety features and side airbags and all these different new Bluetooth and different features that didn't have when the first Hondas rolled off the line. But comparatively, the price is similar, inflation adjusted, to what I paid today to what it cost in, say, the 70s. So how did they do that? How are they able to deliver a car that's almost twice the weight with twice the materials and huge amount of new additional features at relatively the same inflation-adjusted price? Because Honda invested aggressively in their operational investments, in new technologies, robotics, software, to be able to make their cars at a lower cost so they can give the consumer more. Because I think you've noticed that if you look at the sales page and you compare the customer expectations, they're higher now. Even though the price is slightly bumped up, maybe an extra $500 here, but customers are expecting more miles per gallon. And I have to say, the new Honda I have gets about 35 miles to the gallon, where the last one I bought was I think 26 miles to the gallon or 28 miles to the gallon. So they've improved the number of miles per gallon I get in this Honda. The engine power is bigger, 180 horsepower now. The number of safety features is certainly increased. The number of luxury features has increased a great deal. And well, I'll have to say, I think the reliability, which is the warranty, is still 3 years or 36 months or 36,000 miles or something like that. But the price has gone up slightly. the price hasn't gone up a terrific amount. I have a feeling they were able to create some more efficiencies in their company to give me a much more of a car than I got a number of years ago, and not that huge big of a price differential. So this is actually what's happening in this simulation. I see occurring in the real world, and that's why I do favor this simulation a little bit, because I do see a lot of parallels to this auto industry and what we're doing here to what the auto companies do. Okay, so I made my operational investments. That's going to be important next round to increase my cost reductions so I can maintain or increase my profitabilities. So if I go all the way to the bottom, you'll see that I'm going to have a $7 million deficit. Now, I don't want to lose 100 points again like I did in the previous round. So I'm going to actually go ahead and borrow some more money. I'm already pretty leveraged heavily in my borrowing. Um, you know what? I'm going to have to actually, I think I'm going to have to cut back um, in my production. Oh, and yeah, I don't know. This is tough to kind of balance this. I guess I'll borrow some more money. Um, I'm already borrowed so much, and you can see that as I borrow money, you see how my interest rate pops up. So here I'm borrowing money, and my interest rate is popping up. But I'm going to borrow some stock. In my earnings per share is going to see how my earnings per share decreased a bit. I'll put this back to 0. 2161. If I issue new stock, I'm going to issue $5 million worth of stock. Um, oops, that's a little, can't issue that much. Okay, $5 million worth of stock, it drops to $21. So there are consequences to me borrowing additional money, but I don't want to end up with another deficit. So I'm going to try and keep a $10 million surplus just in case I don't sell all the cars I forecasted to sell as a protection. So hopefully I won't have another deficit. Okay, so I think the decisions I made in this round will help me to have a stronger second round and maybe pull me out of last place. But I don't mind being in last place for the first round because you know what? At least all my students did better than me, and that's all I could really hope for you guys moving forward. So but we'll see what happens in round two. I hope that some of the decisions I've made, the explanation of what's happening in the simulation is going to also help you to perform better in round two as well. So I would love to be in last place again so that all of you can outperform me in the second round because it's quite possible. I mean, some of the performances in this class for some students is just spectacular. I'm very, happy. You guys are ready to go run some companies, I think. Well, anyway, that's the end of this special presentation lecture today. I hope it was helpful for you in analysis of the results of round one and also helpful for you setting up and completing round two. If I had some problems with Stony Brook Connect last week on my office hours. I wasn't able to get it working, so I apologize to anybody who tried to connect with me. This week, I did call the technical support. I got it fixed. So this week during office hours, if you want to pop on by, I will certainly help you with the simulation or any questions you have. Or if you want to send me an email, I'm open and available to your students. We can even set up a special appointment through SB Connect to have a private session if you need any help with the simulation moving forward. I'm here for you and I want to be available. And I think everybody so far in this class is doing a great job with their case studies and their discussion questions. I find it, quite honestly, a lot of work for me too. After this, I'm going to go and grade your second case studies. So I have a long afternoon ahead of me. I know this class is a lot of work, but it's all going to be worth it at the end of the course when it pays off. It's going to really be an accomplishment for you guys, and I look forward to that. So have a great weekend, and I will be seeing you soon. Take care.